Alright, hello and welcome to Camel Finance. I'm your boy Camel, and what a year, what a week. Let's just get straight into this. Look, a couple of things to point out, okay? PPI came in wholly in line with expectations or slightly lower, so it still kind of feeds into this narrative that inflation is coming down. Of course, yesterday we had the Fed speak, right? Powell gave a speech, and most importantly, he decided to continue to hold rates at the current levels. But nobody expected Powell to fold yesterday, and that's exactly what he did. So there's so much worse things going on under the hood, and all the manipulated data that we're fed is just simply not allowing us to see it. Things are an awful lot worse, and we had the last hike in August, and now here we are today, continue to be paused, but the Fed, as of yesterday, acknowledged that cuts are coming quicker and faster than anticipated. Okay, so taking a look at this, we of course got to tick off our pause as of yesterday. Today, we sit forward here looking at January, and you can see that the probability has reduced from, it was in the 90s, wasn't it, to around 79.3% that we're paused in January. We're now pricing over 20% probability that we're going to see cuts as early as January, because that's what that's what Powell was hinting at. And it gets even more significant when we hop forward to March. Why? Because in March, you can see there's only a 10% chance we are still at this current federal funds rate, this current interest rate out at March. By March, there is north of 89% probability that we are going to see cuts by March. So on the Fed announcing this, that cuts are likely coming sooner than most people thought, we saw panic buying ensue. And so once again, I bring back up this chart. This has been the bread and butter of this channel. This has been the staple of this channel. And it is kind of strange to think that we are all the way here now, right? We are a few percentage points away from all-time highs. We likely break all-time highs either today or by Friday. As I was saying, the Dow went and printed an all-time high. I'm going to get to these charts in just a second, but I wanted to point out a few things here, okay? First of all, because I get a lot of people say to me, does this mean, is this going to happen? What happens when we get to March? Does that mean that there's a probability that X, Y, and Z can happen? You have to understand, okay? I say this all the time, but for some reason people choose to hear what they choose to hear. Okay, I don't know. Nobody knows. I'm a very much take it one day at a time kind of person. That's the only way to do it. Okay, I could tell you, yeah, we're going to do X by Y date, and we're going to be at this price level at this time on whatever week. But objectively speaking, nobody knows, right? Absolutely nobody knows. This has been the hypothesis. This has been the expectation. You have to have a base case and then work towards that. I've been saying over and over again, this thing has been right until it was proven wrong. It's still not yet proven wrong. Now, again, even though we've got this yellow squiggle here pointing to a top, I mean, this current top would come at, if it was accurate, the 1st of February. We're probably going to go later than that. Okay, we're probably going to get out towards March. So this is never designed to predict time or price. But the overall shape is what I expect to unfold. Okay, I do expect us to run the all-time highs, have this blow off top, and then they cut at the top, perhaps with a simultaneous banning of Congress from owning stocks, just like they banned the Fed from owning stocks back here. And then that sends us into a deflationary bust in line with inflation continuing to come down. Now, this is at the moment testing the base case, but this base case has been tested multiple times along the way. Again, it's right until it's wrong. For now, we seem to have the Fed pause, right? We seem to have the Fed pause in play. We seem to be running the all-time highs. We seem to have the space to rally before we get to these cuts, which currently are priced in for somewhere between the end of January and the end of March. So for the people asking me what comes next, do I still stand by this? Yes, this is still my expectation, but there's nothing to say that we don't get up here and then do something like this, right? And then continue to go, okay? The pony show can go on for a lot longer than most people realize. I've had all this pink text here for what I expect to unfold during this portion of the curve, but we're months away from that, right? We're still 2 or 3 months at least away from this, and that's assuming this even comes to fruition. So I'll worry about this when we get nearer the time, okay? I'll worry about this nearer the time. There's no point talking about once we get up here, if then we roll over, then if we should see this happen, you know, if, so what, okay? What if Godzilla flattens the world? You know, what if the world ends tomorrow because of an asteroid impact, right? We can do this all day long. There's no real use in that. For now, let's just see if we can stay on the right side of the market, ride this thing into price discovery before we then roll over, assuming we do roll over, of course. So as ever, one day at a time. The Dow made an all-time high in all of these years, by the way. So for all these perma bears, for all these macro larps, for all these people that are, but the Fed bro, but X, Y, and Z, right? Just remember, okay, being bearish is dumb. It's dumb to be bearish, okay? Just be bullish, just be optimistic. Life goes much better that way. I've left this here because in the media, we're starting to see this idea that we could have one of the greatest economic years the nation has ever recorded if this guy is re-elected in 2024. Now, I don't know if that's going to happen. I don't really care if that's going to happen. But the reason I'm putting this here and this next slide, which is go ahead and party like it's 1999, is because, again, it feeds back into me being open to abandoning my narrative, me being open to the market, proving me wrong. Whilst this is still the base case, whilst this is still the expectation, and the cuts are historically very bearish, right? We seem to be setting up for those cuts to come in March. That kind of makes sense, that we're going to get the cuts and the rollover. But to be really, really, really clear, I'm not married to this idea, and I am more than open if we go back to 1999. So if we go back into this 90s period, this late 90s period, you can see the market went up for a very long time. There were corrections along the way, right? That right there is a 12% correction, not very much for the stock market. This one, much more significant at 15%. This one, right, much more significant at 22%. But you can see from there on, right, from the late 1998s onwards, very, very good things happened to the stock market walking forward, low to high. We're talking about a 70% move, okay? So I'm open to seeing this thing kind of repeat. I'm open at the hard right edge to saying that just because like, this is my base case, right, just because this is the expectation, I am indeed open to much more printing, much more propping everything up for much longer and kicking the can down the road for many, many years to come. If that's the case, you know, I'd prefer that. It's much easier to just ride a trend that's moving up than it is to try to deal with credit events and deflationary busts and all of that kind of stuff. So I'd much rather it trend up for a long time. I'm not married to this idea and I'm willing to abandon it if it comes to it. So as ever, for the people that keep asking me on what date are we going to crash, just remember, one day at a time, okay? Let the market tell you. It's much easier that way. Like I said, I'm open to being proven wrong. I'm open to this guy getting re-elected and we have an 8-year bull run. That would be kind of nice, especially for Bitcoin, right? Bitcoin could do a gold ETF thing where the ETF gets approved and we run for 8 years up only. I mean, that would be fantastic. That would be amazing. So as ever, I'm open to anything. The nice thing about where we sit at the moment, if I click through these other charts, right? Look where we are. There's the all-time high up here. So I'll just quickly mark that. Not very far away now, right? Not very far away at all. What about the NASDAQ? NASDAQ as well, all-time high back here. I think the triple Qs are already through it, okay? Again, no problem. And take a look at the Dow, okay? There's the all-time high for the Dow, and we're officially breaking out of the all-time high for the Dow. So it's been really, really nice to have a base case, to have a primary expectation. It's been amazing to watch this thing play out. Remember, when we were in this neighborhood, everyone thought we were crazy. People were taking the mick all the time. People were being insulting and rude. And now suddenly, you know, suddenly everyone can see what's right ahead of them, which we've been expecting for a long time, right? We said, how can you be bearish at all-time highs? So we're going to force everyone into the market at the top probably and go from there. As ever, one day at a time. But so far, the signs are all there, aren't they? And the Russell 2K blasting off as well. Again, small cap participation continuing to be included in this rally. So that's the kind of thing we want to see. Happy days, long and strong continue to push. I know a lot of you are eager for me to talk about Bitcoin, and it just hasn't broken out yet. Now, I'm pretty sure this is the cycle low. I'm pretty sure that that's a completed new pattern, and what's coming over the next few sessions is a breakout retest resumption and me adding positions and moving stops up. So I'm pretty sure we've done what we need to do. For now, there is no confirmation, okay? There's no confirmation, which means we have to be open to seeing a rollover and an undercut one last time before we can go. So anything and everything's on the table. For me, a daily close above this red downward sloping resistance line will confirm this cycle low, and the weekly cycle low will tick that one off, and we'll be adding positions. So that's that answered, I hope. Speaking of Bitcoin, take a look at this parabola, right? And I said, I quoted this tweet and I said, look, it probably holds because that's what the daily cycle says. So again, that is probably the daily cycle, which means we've probably got a full 60-day cycle and a weekly cycle, which is comprised of 3 or 4 daily cycles chained together ahead of us. I still believe the path of max pain is this. That's still what I believe will harm the most amount of market participants because they're just not ready, okay? Most people didn't get an allocation in here. They've sat here and watched this. They've been waiting and hoping that 12K, I showed yesterday, some guy still calling for 12K. You know, people are serious about this. I know this bit here is a joke, but people are serious about calling for 12K and a retest of the lows, and they're just going to get wrecked because that's what markets do, particularly as the stock market is now in all-time high territory, all right? It sets us up for a lot of risk to come on. JP Morgan has tripled its internal crypto team, all whilst, of course, it's bashing Bitcoin and saying it would make it illegal. So like I showed you before, it's the same trick at a different year. Often come out and FUD Bitcoin, whilst it then comes out at a later date that they were the largest net buyer of spot Bitcoin during their FUD campaign. This time is no different. This is really nice as well. The FASB has officially adopted the fair value accounting for Bitcoin. So if you're unfamiliar with this, the way to think about this is it was this weird way of reporting Bitcoin held in corporate treasuries, which means if you bought Bitcoin here and the price went down and then back to break even, you had to report it by law. You had to report the loss But even once it moved back to break even, you still had to mark it as a loss for some reason. Okay, you weren't allowed to say, no, it's back to break even. As soon as it went down, whether it went up again or into profit, you still had to mark it as a loss. So that's a weird way of accounting. Now we've got a much more reasonable way of accounting, where if that's your buy level and Bitcoin's price does this, then you can record a break-even amount. You don't have to report a loss. And if it does this, you're allowed to report a profit on your Bitcoin. Okay, so makes a lot more sense now. But the good news is, you know, when these companies that hold Bitcoin on their corporate treasury, like Tesla and MicroStrategy, start to come out and report profits, that's going to get a lot of attention. Bitcoin's going to get a lot of eyes, and it's going to have proved that this concept of holding Bitcoin on a corporate treasury works in terms of preserving and increasing purchasing power. So overall, that's going to be very, very bullish. I'm convinced of that. And of course, they continue to lay the groundwork in the mainstream media. They continue to start to herd people towards providing exit liquidity for the big players. Okay, this is from the Financial Times, and they are showing that Bitcoin has ESG credentials. So again, it's a big narrative shift from Bitcoin is boiling the ocean, or Bitcoin is using an entire swimming pool's worth of water in a single transaction. Okay, now we're talking about how it could actually boost ESG. And of course, this narrative is going to continue to build as they continue to herd the masses towards Bitcoin right in time for their ETF approval. So overall, everything looks really bullish. Look, we got that fake breakout for the dollar. This is the dollar index right here. I was talking about this yellow line, deviation and continuation down towards this 3-year cycle low and a target of 95 that we've had since the top back here. So overall, that seems to look great, doesn't it? This seems to be playing out. So happy days there. I'm going to get rid of this because we don't really need this. It's also worth noting when we do this, I like to say that we'll extend the line out here because that's the new level that the market is respecting. This becomes our new line in the sand for the DXY. And I bet if we go to the euro dollar chart, exactly as expected, a bounce off of support, a new daily cycle ahead. And of course, this is going to continue to pressure the DXY to the downside because this makes up 57% of the dollar basket. The GBP chart looks exactly the same as this, and of course that contributes another 15 or 16% to the DXY. So the DXY is under pressure, and this is going to continue to bleed to the downside whilst risk comes on and whilst dollars leave the supply and enter risk assets like the stocks and crypto. Like I said before with the stock market, we're approaching the all-time high. We're probably going to get the all-time high prints across the board by Friday. We have got a daily cycle in play, right? We've got a daily cycle low due to show up somewhere around the 22nd, but that still gives us a fair few days, doesn't it, to push up, run the liquidity above the all-time high, and then pull back into that daily cycle low. Same is true of the NASDAQ, right? And of course, the Dow. Dow may well just continue to blast off all the way to this measured move target, and if it does that, then I will close this trade out at around 38.2 and look to see what happens from there. We've got a sub 12 VIX, ladies and gentlemen, on our way down to that 10 to 8 region where we can look to long the VIX from here if we are indeed going to get a meltdown and a deflationary bust next year, as I suspect we will, catalyzed by rate cuts. Then we'll likely see this thing explode higher. Like I showed you earlier, Russell 2K, you know, this is a good sign. We're seeing market breadth widen, and that's what we want to see if this is going to be a true blow off top move. Oil still short and strong, nothing else to say there. Gold getting a little bit of a bounce out of a daily cycle low, but I kind of expect this yellow squiggle to play out. If it breaks the all-time high, you know the plan, right? We'll buy the all-time high break, but I'm not feeling this at the moment. Same as true of silver, right? Little counter trend bounce here. Can it re-break out? If it can get back above this line, then I'll entertain longs. But for now, I'm not really interested. And the miners still got work to do, right? Still got a lot of work to do. Perhaps we're going to see the junior miners lead. If that's the case, then again, that will be a breakout that we can respect. But we'll see how this goes, right? We'll see how this goes. I'm not wholly interested in this because I think the gains sit largely outside of the metals market for now, at least. As I said with Bitcoin, waiting to see a breakout. But if we can get that, then that will let us know that that is indeed the cycle low and we don't have to roll over and undercut it one more time. If we did roll over and undercut it one more time, then that presents a really nice buy the dip opportunity. But again, we'll still be waiting for a breakout. That's what I need to see confirmation. I don't want to come jumping in here in case we get some kind of blow up and a meltdown. So I want to see confirmation by a change in structure and a breakout. And like I said, we'll add the position there. Someone was asking me to cover XRP. It's been a while. It's not really doing a whole heap of anything. If I zoom out, we've got this massive triangle that goes all the way back here. At some point, it's going to break out, right? That's the expectation. And we'll keep pushing this long. Hopefully it can break out and then fireworks can begin. In terms of the crypto related equities, I think I might have missed the cycle low. I think that might have been it. I think we might have had it prematurely. So interest in here. I wonder what happens next. I might just have to continue to push this trade. So hard to see where the next entry is going to come from. Same is true of MicroStrategy. Same is true of Riot, right? Is that the cycle low? Did I completely miss it? And the same is true of Marathon, right? Are we just going to enter this blow off top moment? So there will come a time when we got a high probability setup. Maybe we could buy pullbacks or bigger flags. I don't want to go rushing in just yet because Bitcoin hasn't even confirmed, but these stocks seem to know something. So that's pretty interesting for sure. If of course I do end up missing these, if these just start to fire off, I can always push those positions and then add more exposure via Bitcoin itself. And take a look at the 10-year yield, okay? It's sub 4%. So we kind of knew this was coming on this channel, didn't we? And it seems to be unfolding. This is, of course, conducive to massive risk on moments. And what's really interesting about this is if we go to the 2-year yield and I overlay the Fed funds rate, which is in orange, right? The 2-year yield in green, the Fed funds rate in orange. You can see every one of these blue vertical lines denotes the time at which the Fed funds rate crossed above the 2-year yield. And what happens thereafter is, in every case, we get a pause in Fed funds, right? We get a pause in Fed funds, and then the 2-year starts to roll over. Then shortly thereafter, we get the cut in the Fed funds rate, and that is what signals the top for the market. So at the hard right edge, we've got the Fed funds rate currently paused perhaps for another 2 months into March, right? Whilst this is already starting to make lower highs, right? So we're probably going to see the 2-year yield roll over, then we're going to see these cuts come, and of course historically every time we've had this cut cycle on the set from the Fed, we have seen the stock market crash. The good news is, in the meantime, during this pause period, this pause, right, all of these pause periods, the market tends to run the all-time highs and have a blow off top moment. So I expect this time's going to be no different, but undeniably the signs are there, right? The signs are there in the rates. The bond market always seems to know what's going to happen ahead of time, and right now probably going to get this pause followed by resumption of this downtrend and then cuts, and it should be a lookout below type moment. Interestingly as well, in this neighborhood for March, where we expect to see a large deflationary bust, we're also going to be looking to make a 4-year cycle low for the S&P 500. So all the stars seem to be aligned as ever, one day at a time, but undeniably this is a pretty interesting look. So just to reiterate, still looking to add Bitcoin positions. If we can get a breakout of this downward sloping red resistance line, expect me to add another long, okay? In fact, I'm going to move this back now. I'm going to move this back to like here, just so it's out of the way. I'm going to grab this and put this here. This is what the long will look like, something like this, okay? And it seems mad, it seems crazy, admittedly, but we will be looking for the all-time highs to be run. We'll be looking for much higher numbers. I know someone's going to say, is this your target? No, it's not my target. It's just up there, okay? It's just up there. And we'll see what the market can give, as always. So amazing that we've gotten to this point in time. Amazing that we've run the all-time high for the stocks. Amazing that we were calling for this the whole year, and now finally we're here. But unfortunately, if I'm right about what comes next, then next year is going to be quite difficult to deal with. But as ever, we're open to anything, one day at a time. I hope you found value here today. I hope you are enjoying the content. I hope you're doing well in life. And until next time, take care from me. All the best. Cheers. Bye.